Hello, and welcome to the Market Bull podcast. Please note, topics and stocks discussed in this podcast are not financial or investment advice. Today on the show, I spoke with Keith Della-Vedova, a representative and corporate manager at CPS Capital. We started by talking about the current market sentiment in Australia and globally, whilst highlighting some of the recent company quarterlies and announcements. We explored lithium and the news coming from junior explorers to the large-scale producers. A lot was covered in this episode, and I hope you enjoy listening. So hello, I'm Ben Kostrich, and this is the Market Bull podcast. Joining me today, a regular of mine, is Keith Della-Vedova, representative and corporate manager at CPS. Welcome back, Keith.
Thanks, Ben. Really good to be back again. It's a bit gloomier out here in our boardroom at the moment. We've moved from summer, so some greyer times out, not just out there, but in the market as well.
Oh, agreed. I mean, I've ticked over 50 now. Probably should have had you on before then, but it's been a handful of months since we last spoke, and I mean, there's been a lot happening from sentiment perspectives to commodities. So, I mean, diving straight into that, I mean, what are we seeing evolving currently, or at least over the past handful of months now that we've just wrapping up quarterlies and US earnings?
Yeah, I think what we've seen recently is the US probably got on an astronomical run, right? I think the Dow Jones and NASDAQ have had incredible runs. We're talking about 12 to 14 days of rises in a row, which is quite unheard of. And we start to see where do we go next from here. I think we've seen the worst of things for now. Whether there's a slight pullback or not, maybe there is because we've been on such a strong run so far. But I think the worst of the uncertainty and the rates hikes and everything like that we may have found out. If you look at trueflation, where the US is at, they're probably back below 2% at the moment. So whilst it'll take a while to eventually get there, all the numbers are starting to come down, and eventually we should start to see the Fed in the US start to cut rates. They're probably ahead of where we are in Australia. I think Australia, we're going to be at these elevated levels and maybe even higher for a prolonged period of time. We know we could be here for 12 months where it'll just be leaving it where it is and see where that goes, because we need to see the numbers really start to come down. So we're probably in a little bit more pain here, but certainly in the US, I'd start to see the Fed start to cut rates at some stage, if not probably early next year, realistically.
Yeah, well, the RBA's met, we're recording, but this week, and they decided to keep it on pause. But it doesn't really give a lot of confidence that it's going to stay that way. It's more of a, we'll hold it here, see what happens, see what the numbers are looking like, and then progress as the months go down. But I mean, the US is in, again, a few months ahead of us, or their cycles are a little bit different. But what's the sentiment like in Australia at the moment, and what's the movements and activities looking like?
Yeah, I think we're starting to see a bit of an increase in the large caps. That's typically where it starts to move first, where sentiment improves. There's a lot of money that's probably sitting in, term deposits that are starting to mature and starting to go, well, 5%, in 12 months' time is probably not going to cut it because rates start to come down. So they start to look to where do we deploy that capital, what sectors are going to be firing. And if we start to see trends, I guess if the US dollar starts to come back against the Aussie dollar, we're sitting at 151, 152 at the moment. If that starts to come back down towards 140 with interest rate cuts, we should start to see commodities, gold, and energy rally. So that'll be a big tailwind for the Aussie market with sentiment improving and, a lower US dollar probably, late next year. We should really start to see some of these Aussie companies which earn out there start to be, really attractive. And, we should see that not just tailwind from that, but these dividends that keep getting paid out in the Aussie market, people start to go, right, well, 5% my term deposit, I can't lock that up for this rate anymore. Where do I deploy that money? Does that money go back in the market? So, and there's a lot of good value out there at the moment. We've been scared the bejesus out of with these rates rises, but there are bargains out there in the market.
Yeah, well, I've seen some emphatic rises in some share price and just stocks, and naturally the activity, the M&A has still been there, but just some of the companies making, as they always do, a discovery and just seeing a share price rise. I mean, I look to Azure. The rise that they've had recently has just been astronomical, and I'm sure I'm not the only one that's been watching that, but there's a lot happening out there once you make a discovery, and the scale that they've got is quite astronomical. But what else is happening if we're diving into the lithium space, as we always like to talk about? What's unfolding there in Australia, and then we'll sort of explore some of the other jurisdictions with some interesting points.
Yeah, well, I mean, you talk about Azure, right? They've really gone out there and done the groundwork, and where they've done their rock chips like everybody else, and they've come out with good grades, and people stick a few holes in the ground, and down to 100 meters. There's barren pegmatites which aren't really lithium bearing, but they've got a good exploration team behind them, which includes Mark Creasy, who's done a lot over the years, and they've also got SQM in their register who know the lithium space. What we're seeing is a lot of this stuff isn't obviously from surface. They're about 200 meters to 300 meters down. So if you're just poking a couple of small holes in the ground for RC down to 150 to 180 meters, you're probably not going to find anything. Whereas Azure have really gone out and punched a couple of big holes in there, and they're hitting these stacked pegmatites at significant depth, and they're hitting 100 meters plus at really, really good grades, and that's why they've gone from the 40 or 50 cents, because it looks like that deposit is probably going to be anywhere between 100 to 200 million tons at a good grade, and it'd be one of the biggest in the world, I guess. And AZS only own a percentage of the company as well. It's still partly owned by Mark Creasy. So, and SQM a 20% shareholder. They've got plenty of cash at the moment. That's why they've gone on that significant run, because they've got the right people behind it. There's plenty of people in this area. We're involved with Green Tech Metals, who are out there, GRE. Full disclosure, we've done the last IPO and the raises and everything. Well, we've got stock. I've got stock. And they're not too far away. We've actually been out there, and they've said, over there is just where AZS are. But they're getting the same sort of rock chips over a 7-kilometre trend. But just because it's at surface doesn't mean you can find anything below at the end of the day. And that's one of the key things that the market is starting to realise. We've seen a lot of companies that have run on pegmatite finds, and we've hit pegmatites, and they've all come up with insignificant grades of lithium in these pegmatites, and that's where I think the market sentiment's almost died a little bit, where a lot of people promised a lot but under-delivered in that sort of aspect. And a lot of these people were saying we've hit pegmatites from surface, they're going down, but again, going back to the Azure stuff, that's all 200 or 300 meters down. So, you've got to be able to know and understand that, these things aren't from surface, or there may be pegmatites from surface, but the lithium-bearing pegmatites are actually down a lot deeper. So it takes a certain type of company to kind of go out there and really philosophize what they've got, and start to put the pieces of the jigsaw together. And again, going back to Green Tech, I think they're going to start drilling out in September, and it's a good risk reward play at the end of the day. They're not capped at $1 billion or anything like that. They got cash in the bank, and we're backing them to go out there and drill these deep holes and go. We want to see if there's anything down there. There might not be, but if there is, and we're looking at AZS at a $1 billion market cap, we're looking at Green Tech at 30. You can automatically tell the disparity between the two. So and that's what you've got to have the confidence in this market, is that you've got the management team in there. They're fully funded, which is very difficult to find at the moment. There's a lot of companies post quarterlies that are going, oh, by the way, we actually don't have any money to go on and do what we need to do, or by the time that we can go on and do what we need to do, we're probably not going to have any money either. So that sort of sentiment is what the investors are starting to see, and that's why you're seeing that disparity between the large end of town and the small end of town. You're always aware that there may be a capital raise or of sorts around the corner, and we just seem to be going in waves. Probably a month ago we had really good volumes in a couple of stocks. I think it was LDX, kind of had been sold down from their IPO at $1 to 1 cent. Went from 1 cent to 20 cents on a couple of 100 million shares a day. And you were like, oh wow, things have really turned around. And then you look now, and volumes are very dry again. Sentiment's gone back down. So it's very sporadic in what's going on at the moment.
I mean, is that again because investors are becoming more alert or attuned to some of these discoveries and what it is? Because you could say the lithium bubble and the excitement it's had for quite a while with the noise of electric vehicles given, there's been a lot of this activity, but are people becoming more switched on as to what actually is going to be a genuine discovery? And floats back into the idea that everyone can go find things. It's another story to actually get it and improve it.
Yes, because there's a couple of, I won't name names, but a couple of large companies that were, larger companies that, were in the billions of their market caps producing results that they say we're going to deliver X for shareholders of. stuff that was kind of unrealistic at the end of the day. You know, we're talking about brine, we're talking about hard rock, we're talking about companies in North America and in South America that were promising things that were never really feasible. And when you're looking at capex to build these projects, we're talking about, you know, $1 to $2 billion. And where are you getting that money? Where are you getting that capex from? From off-takers? I really don't think so. So a lot of these companies have come back to reality land and gone, oh, by the way, you know, we're still 2, 3, 4 years away from really getting into production. And by the way, we need $1 billion. Shareholders are starting to go, well,
tune to it.
Well, that doesn't really make a lot of sense at the moment. And you throw the institutions into it who know this is, you know, probably not going to happen. There's shorting going on, and, you know, that makes for, you know, pressure on share prices going down. We've seen a lot of these companies that were $2 and $3 billion, you know, the Lakes, the Cyanas and stuff like that, who are now trading at 12 to 24 month lows, because it's like, well, that doesn't really make a lot of sense.
Yeah, the reality's kicked in, and that's part of the hype train that goes along with it. And then, I mean, Australia's had a lot, but it expands the lithium market outside of Australia, and I think it goes without saying that North America and Canada in that region is heating up a lot, especially given the seasonality. And I've spoken with quite a few people that are closer to that area. Gwen Preston, who does a lot of coverage there, and she says that it's potentially going to be one of the most exciting short-term lithium excitement buzzers in that area, just given the time of year,
Everyone's kind of gone pegging ground over the last 2 years, and you've got to do your rock chips, you've got to do your sampling, you've got to get results in, you've got to identify drill targets. So that's kind of what's happened the last 2 years out in North America. You know, aside from PMET, where they released their maiden JORC the other day, you know, that was very good, and then it's only their initial maiden. You know, they're still doing a lot more drilling. That strike's a lot more significant. There's a lot of skepticism that it's quite remote. So you have to weigh up and balance. But, you know, Albemarle come in for 109 million Canadian and take up 5%, which for them is, you know, nothing really. At the end of the day, they're paying for a look, and they're paying and going along with the confidence of Ken Brisbane and whatnot, and going, well, you know, we're happy to take a look at what's going on here. So the North American stories have got a lot more to play out, and we are, as you say, going to that, you know, it's kind of the first, you don't drill in summer over there because it's too soft, so you need to drill in winter, so we're coming up to winter. Whilst there was the Winsoms and that who got out there and drilled early, the green technology and whatnot, you know, we're coming around to where a lot of the guys only pegged ground are probably going to come into drilling season for the first time. You know, we could see a lot of discoveries going on. We could see a lot of good results, and, you know, that should start to bring, you know, outside the Albemarle going into Patriot Battery Metals, you know, I think even that brings some sort of confidence back into the sector that, you know, whilst there's outside investor sentiment, which is, you know, quite depressed at the moment with interest rates being high, disposable income being low, you know, that's really taken a froth out the market. But the underlying drive for lithium, this is when the big boys come out to play and start to write checks and start to take strategic positions when, you know, everything's depressed and there's opportunities. They don't want to buy at the top of the market. They want to get in there when there's opportunity, when they see value. And that's probably what we'll see over the next... Even Rio Tinto come out yesterday or the day before saying, hey, we'd really like to get a spot in Canada. You know, we're looking at a lot of opportunities. They're partnering with people. They're looking at companies that are undervalued, and do they make an acquisition? What do they do? So, you know, it's where the big guys start to come out to play and start writing out checks and start making acquisitions that make sense to them.
Well, there's been a lot of that because, I mean, Leo Lithium with the Gangfen, I should say, buying into that story as well was not that long ago, and especially with Albemarle now getting into Patriot Battery Metals. I mean, I always look back now to the Liontown conversations. There's not been much there about their dealings, and I wouldn't be surprised if something starts unfolding now in the next coming months, because, you know, they're clearly out there with their checkbook looking to get into it, and there is really this driver from these big companies being like, we are securing these potential areas to supply to the growing demand. But I mean, naturally, lithium has been exploding, and it still is, but there's so many other facets of the market that have been operating quite nicely with other areas. I mean, are there any other particular resources that you've noticed or other aspects of the market that you see, I guess, interesting activity or just points of information or notes? Or
Well, I think, again, going back to the FX and whatnot, if we start to see the US Federal Reserve start to cut rates, we'll start to see a lower US dollar, which will be a tailwind for gold. So gold will start to go on a rally. Or even JP Morgan are predicting gold to be up significantly by 2024. And I think that'll be the case, because that's what always happens when the US dollar comes down. We've still seen central banks consolidate gold to prop up their reserves. So that's also a good sign. You always need more discoveries. West Africa is a very good place to do your gold discoveries at the moment. So Africa is very an attractive place because it's low cost to produce. So I think the African gold players are doing quite well, whilst there is geopolitical risk. Probably around lithium. I think there's a few kind of caught up in things at the moment. The countries, and regarding the sovereign risk, you've just got to do it right from the start. If you're going to start doing DSO and not include the government, they don't get their cut, they're going to get pretty angry about it. It's not different to every country just wants their cut at the end of the day. So there's a little bit of that, but I think gold out there has been going on. That law's been written a long time ago. Copper, I think copper will be on a really strong bounce from here. There's been a couple of small cap copper companies that have kind of produced good results, and there's declining copper grades in mines significantly going around the globe, and there's been no new discoveries. So we're at that stage where if you find something, again, the big guys will start to take a look, because they're not finding anything themselves. So you need to replenish this copper, and copper demand's only going up. So whilst it might not seem so in the copper price, but you can tell the fundamentals of diminishing grades in existing mines to needing newer and higher grade deposits to fill the lacks at the end of the day.
Yeah, well, because the copper price, as we're recording, I think it's flirting with the $4 mark again. It's been I think for a lot of copper heavy investors, been quite frustrating, that whole journey, given the outlook for it. And it's just, again, when does that sentiment, when does that drive start? And that's where I always look, if you had a crystal ball and you could look into the future, you'd know that we're all going to need it. But again, it comes into that, what's the right price to get into certain stocks and certain commodities if you're overpaying or underpaying. And I think there's still a lot of, confusion out there with a lot of people as to what is actually still going to unfold.
I think everyone's scared of a company doing a capital raise at the moment. And that also provides opportunity if you're an investor as well. Something's oversold, it's overdone, you can get in. But finding these companies that have got good quality projects, good management, know how to manage capital in this sort of environment. There's not a lot of free money flowing around at the moment. It's not as easy as what it was over the last couple of years. So, how do you not dilute yourself out of the market? And how long is this money going to get there, and what's it going to do? Are you going to have, anything significant along the way? So there are opportunities out there, but, you can't just invest in everything like you did previously, and then eventually it'll go up. It's just not happening at the moment, and probably should have happened previously. It was more kind of luck-based gambling in the stock market at the end of the day. It's back to true traditional investors and value investing, I guess, at the end of the day, trying to find out where the value is. If you can see something at an EV that's 0, 1, 2, got good projects, it's a pretty good opportunity to get into.
Yeah, well, and that's the other point is the idea of what sort of investor you are becoming. If you can actually put up with a bit of the volatility, which inevitably is going to continue for a while. I haven't checked the VIX recently, but it's not going to take too much for that to go astronomical again. And we're in an environment where people are almost more afraid to dip their toe in the water than anything. And it's, you mentioned like the capital raises, companies have been in a tough position, and now they're having to almost overcompensate to get any sort of equity in there, because I just know there's a lot of smart money either sitting on the sidelines still waiting or what's going on there, but there's really no shortage of these gold opportunities, polite pun, for options.
I don't even think you want to be in the development phase really at the moment, because everything's blowing out cost-wise, things are costing more. It's taking a lot longer, so you need more money. You look at Pan Continental the other day, did a raise at a 40% circa discount. They've been producing nickel, it's meant to be great, but then that's just burnt all their shareholders. They're in a downtrend, and when does that stop? The excitement and the value at the moment, whilst it's more riskier, is actually in the exploration side, because if you find something, there's a massive upside. But developing some things at the moment is just, it's really difficult at the moment.
Yeah.
So the downside from a $1 billion market cap is significant.
Yeah.
The downside from a $10 million company is, if they've got $5 million in the bank, it's 50%. So, and but the upside from that is significantly more. you can go to 100 mil, which is 10 times your money. And, we've spoken about this many times. The downside from $1 billion is, as we said, a lot, but the upside from $1 billion is
minimal as well.
Yeah,
in some
there's,
cases,
there's not really a lot to get you there. So where's your risk, or where's your bang for your buck? When we're looking to do in the junior end of the market, where's your money better spent? So that's my view on it. It's hard to be in the development phase at the moment because things are costing more, they're taking a lot longer, and the expertise to deliver these projects, particularly in the lithium space, there's not a lot of lithium experts out there that can actually deliver something of scale, on time, on budget, that meets the market expectations.
Yeah.
And then, it comes down to, we need more money, we've got to raise more money, the price is going back down.
Yeah, well, that's the interesting point, the on time and on budget, because lithium has always been how'd you say it? It's another industry. I sort of look to it like uranium was quite a few years ago, where there's a limited amount of people that know what they're doing, but yet as soon as it's got that buzz, every man and his dog is going to be looking in everywhere. But the reality is not everyone's going to be able to execute on it, and it's just so difficult given that everyone thinks they're on a winner. Everyone's always like, I've got the next best thing. As soon as a region blows up, everyone wants to get in it. But the reality is people don't do the due diligence on the team, the management, and where they're actually at, and what the capital structure is like.
Brazil's the new kind of hotspot really for lithium after Sigma, after Latin, SLM, Solus. We're getting kind of a few guys pop up with, and it's a really good spot to be in at the moment.
Yeah.
It's like the Canada of 2 years ago. So you've got to follow the trends as well at the end of the moment, but. Yeah, it's you would kind of keep going around in circles a little bit, but it's all about the structure of the company, the management, the money, and who's delivering. There's plenty of lifestyle companies out there, as I like to say.
Oh, no, 100%. And especially at the moment, I can imagine it's quite busy looking at everything happening around the world, because another one that I've been learning more about and becoming more familiar with is silver. And I don't know if we've talked about that, and if you've got much to contribute to areas or potential opportunities in the silver market. But given the demand and the awareness that I've had now with solar panels and some of just the changes in the uses of silver, it becomes another commodity that I go, wow, either it's really good marketing, which could be, but you see all these commodities and resources suddenly seeing a real necessity, but it's just about finding that sentiment and that investor drive, which, well, yeah, I'm struggling to see.
Anyone ring me up and go, by the way, can you find me a silver stock?
Yeah.
So that tells you the sentiment.
Exactly.
Yeah, I mean, there's a little bit more coming back into tech and AI. I don't mind the kind of tech and AI that's kind of coming through at the moment. Need to be a little bit more specific. The numbers coming out of the big end of town in the US are quite good.
Yeah.
Quite expensive as well to kind of get it going. So that's the other thing you've got to take into account. I think that'll kind of start to take off. All these NASDAQ companies that were going high growth at uber low rates and going grow. Now they've all cut all their costs out of their business, and we're seeing an upside after they've cut all the costs out of their business, we're seeing an upside in their revenues and going, these companies are now actually profitable, which is why we're getting a re-rate in the NASDAQ, because it was so depressed. Actually, some of these companies are actually quite good.
Yeah.
Now they've cut all their costs out of the business, and now they've stopped trying to go after growth. They're like, let's optimize the business. So that's why we're starting to see some surprise up in the NASDAQ and whatnot.
Well, we talked about it. It would have been the first episode we recorded about the economic squeeze and the cleanse, in a way that some of these big tech companies that had got astronomical share prices had arguably way too many silly costs, that they had employment all over the world for real no reason, and there was this real culling. I know that Twitter, or X formerly now, came under a lot of fire for the amount of people that they let go of. I don't know, Elon commands a fair bit of attention, but the building, it's still running, it's still operating, and if it is claimed that they got rid of 80%, you just go, well, geez, that's a huge cost just cut. And
what were these people doing?
Exactly. And you go, if that's just one of the big tech companies, you apply that on scale to everyone else, you go, well, far out. If everyone else is doing that now as well, not maybe getting as much headline attention, suddenly the profits and the returns and the revenues start looking a lot more appealing. Because, the AI side of it, I follow that quite intently, and I've noticed, again, the sentiment is driving that, noticing the terms AI being thrown into quarterlies. I think NVIDIA had a huge run, but now we're seeing Google, Microsoft, all mentioning AI more and more in their reportings. I saw some funny statistics showing the increase in just the usage of that word over the past year as a real driver of where sentiment is going and what investors are looking for. But I mean, there's just so much out there. It's just a matter of, as you said, drilling down on it. So I can imagine yourself, you've been ups and downs with business, but where have you been particularly focusing your attention on over the past few months? And have there been any really plug time noticeable companies that you've really seen some potential in that you're excited about?
There's probably a couple more in the unlisted space. We've got a really big lithium geothermal one out in the US called Phoenix Lithium that's been going really well. Should come out with an initial JORC shortly. It's been kind of kept under wraps for the last couple of years, and eventually come out with a website finally, and everyone seems to think that's the big all and be all for a company that come out with a website, right? But come out with the JORC, it's going to be quite significant. It's been one of the material biggest deposits of lithium in the US, and I think that's going to be quite exciting. Again, you guys had the ARB Interactive guys on the podcast recently.
Yeah,
they're
Patrick.
actually live in the market. Patrick,
Oh, exciting.
They're doing really good revenues. If you follow the VGW story and how they went, and a couple of other companies that are in this space, the guys are producing, really good early revenues after 2 weeks, and to actually get something like that in the market, live product and everything is significant. So, I think watch that space. I think that'll be really good. And then, I guess it's just harder in the smaller end at the moment. It's probably more selective. Look at companies, sit down with them, say, where can you save money? How do you keep your runway a little bit further? Sentiment will improve, and what have you got coming to market? Let's go back to the Canadian lithium ones. You're not going to drill in summer, so how are you going to get through, and what's going to support your share price until then? And and then what does the future look like to give people clarity about, do you have the money and can you execute on what you're saying you will? So yeah, and then just going through all the quarterlies at the moment, it's been a bit of a, it's a good understanding, and it's not, it's not difficult to kind of read between the lines.
Yeah.
Most investors can do it. And kind of drilling down and sitting down with people and being like, what's going on? And that's, I think, what a lot of companies have been waiting for, or investors have probably been waiting for at the moment, is to understand where companies are actually at and what does your balance sheet look like before I dip my toe back in.
Yeah.
So,
well, as you said, there's a lot of companies that it's coming out now that, they might not have the cash to continue, which either means that they've been recklessly spending it for various reasons, or they're getting to a point where they have to do a raise. Investors are a bit more switched on to, not diving into companies that are going to do discounted raises. But then on the other side, there's been some very, very well supported ones, which goes into the idea that there are some ones nearing the bottom where arguably you could say it's a good time to be getting in. Yeah. But that's the beauty of this whole market.
We did one called Firetail Resources, FTL, copper story, that they picked up a copper project and they've got some lithium in WA, but you look at their market cap, it's 10 to 12 mil, and they've got 9 to 10 mil in cash. You're looking at a 1 to 2 mil EV to get their projects to where they are to ready for a drill. You'd expect an EV of kind of maybe 10 to 15 mil. So you're looking at stocks like that, and I'm quite comfortable going in there and buying for clients on market and in the placement, going, this company's got $10 million, they're going to go execute on this. Yeah, it might take a couple of months, but all the groundwork's been done over the last 2 years to get to this point. So the risk versus reward is like, well, the downside's cash, which is 20%. The upside is, well, we don't know. I can't tell you what's in the ground beforehand, but what I can tell you is there's an opportunity here to potentially make some money, and that's the sort of thing we're kind of driving through at the moment.
Yeah, no, and that's what I'm trying to look for. But as we all know, there's not enough hours in a day, which is where it's good to have people in this world that are diving in and exploring it every day. Because as much as everyone likes to say they're a great investor and they know what they're talking about, you can always learn more and find out more. And I chalk it up to there's just not enough hours in the day. But I know you've got a holiday coming up, which you're very excited about. We won't talk about that. It's private. But going forward, what do you really think is going to happen over the next period of 6 months in Australia? If I'm angling down back into that before we wrap up.
Yeah, look, I think what's going to happen is I'm going to get on a flight tomorrow night. But going back to the Aussie market, I think we've just got to get this sentiment return and kind of confidence from the RBA that rates aren't going to continue to keep going up. That you can already feel the depletion of money being in the small cap end. People are speculating less.
Yep.
The RBA has been a process of that, of kind of tightening
Tighten the belt.
For everybody and go, do I really need to risk that money? Am I going to be doing this at that stage? When rates were 2%, people were happily doing that because I don't know, my mortgage is low. It's not going to change. But now people are a little bit more reluctant. So it becomes more of a selective environment. There will be wins. You will make money in this market, but it will be more selective rather than a hype-based sort of sentiment that we've seen over the last couple of years. So, you tend to sometimes have bigger wins because they're more concentrated in this market. So, yeah, it'll be interesting. There'll be a lot of companies that probably won't survive over the next 6 months. But, there's also a lot of good opportunities that will provide themselves, whether if you're not in a stock and the company's gone down to a 1 mil, 2 mil market cap and you can recapitalise it and get set and find something else, that's a very good opportunity for someone that's not already set. So there's multiple avenues to get very excited about the market over the next 6 months. It just depends on what goggles you've got on.
Yeah.
You're looking at from I'm already holding and it's on the way down and I haven't made any money in a while. Sometimes you need to liquidate your positions and move on and start again.
Yeah.
But you've always got to be active in the market because there's always an opportunity there somewhere.
Well, as you say, everyone's a good buyer, no one's a good seller.
No one's a good seller. I'm very, very bad at doing that myself. I think I'm a good buyer, and you've just got to back your stories, which is it's what we do. We get set, and we're happy to kind of play out. Whether it's go back to Jason, who's the MD here. I think you have a look at Bellevue Gold. You'll find himself sitting there with a position after 6 years, which is quite healthy. That's a 6-year position to turn itself into that. So it's not all short-term stuff. It's kind of a trend. If you believe in the company, you will get these significant returns. I think it's 100 times to 200 times money on that. So.
No, I appreciate it. It sounds naturally like there's a lot happening at CPS Capital and, of course, yourself. So for listeners, as I always say, want to learn more, get in contact with you and pick your brain about it because, there's opportunities that you can get access to on the publicly traded, but there's definitely the private ones, which, you suddenly hear a story, but it's been brewing for a while. Where can they go to get more information from yourself?
Yeah, again, you can go to our website and have a look. You'll be able to find myself on there. There's no mug shot, but there's a QR code of me. So send us an email. You can get in contact with CPS. And we're always active. We're always doing things, and there's always an opportunity at the end of the day. So accounts are free as last time I checked, so it's always worth having one open. Fantastic.
Well, enjoy your holiday. I'll let you scoot on the plane and enjoy it, and then I'm sure I'll probably have you back when you do arrive back in Australia, and I'm sure you'll have some updates on what's been happening because, as we said, you'll probably still very likely be on your phone from time to time, even if you're exploring the world. So thanks again, Keith.
No worries. Thanks for having me.
Thanks for listening to the Market Bull podcast. If you enjoyed it, please make sure to like and subscribe. You can follow the Market Bull on our socials at Twitter and LinkedIn by searching The Market Bull. You can also subscribe to our newsletter on the website by visiting www.themarketbull.com.au.